Welcome everybody. Today we are analyzing Metastock. Here I am on TradingView, checking it out. Here's the 5-year chart. They have been on a nice trajectory upward. They did have a slip up here. They dropped a lot, like 70% from this peak to the trough. That was when they were doing all the metaverse spending and such. And then since then, we've had an absolute ripper of a rally all the way up to new all-time highs. And let's do some analysis on this stock, shall we? The market capitalization is 1.23 trillion, definitely a large company, and a price to earnings ratio of 34. Seems expensive. Let's see if they have growth to back it up. Financials. Let's check their statements, and let me zoom this in for you guys. Go on an annual basis, and okay, here's the revenue growth. Absolutely stellar revenue growth, except for 2022. That's when they were doing the metaverse stuff, and they didn't grow at all in 2022. And then 2023, they resumed growth at plus 15%. Do I believe that this revenue growth will continue? Yes, I do, because they have such high network effects and lots of pricing power, and digital ad spending is not going away anytime soon, and they are the leader in that. Their earnings as well have followed along, except for last year when their stock price tanked, but now they're back up to $39 billion a year. Let's check out their net margins. If we go on an annual basis, okay, here's their net margins. 39% to start, and then down, and then back up to 35%. I do believe that this is a very high margin business, and I think that it's going to continue to rise into the future. Their ROIC is this line right here, over 20 every single year, so a check there. Let's check out their balance sheet. Their most recent quarter, we can see their net debt is negative 27 billion. So they literally have enough cash to pay off all their debt. Super, super good to see that. Their cash flow is going to follow earnings pretty close on an annual basis. Their cash flows are 43 billion, which I'm pretty sure that's even higher than their income. So yeah, a little bit higher than their income. Let's check out their most recent earnings presentation. Let's see. Okay, here is their revenue generated per geography. They make most of their money from US and Canada, and then Europe, Asia Pacific, and the rest of the world. Does look like they have plenty of room to grow in the Asia Pacific region, especially since that's where most of the people are. However, most of the money does come from US, Canada, and Europe. But they are all over the world, and the network effect just continues to grow stronger. Their revenue by user geography in total, apparently this is just advertising at 38 billion, and then their revenue in total is 40 billion for that quarter. So yeah, most of their revenue is advertising, obviously through Facebook and Instagram. Their segment results, yeah, advertising, and then other is, yeah, much different. Family of apps, not quite sure what that is. Let's see, expenses. Their expenses are pretty low as a percentage of revenue. Looks like the marketing and sales, or no, research and development. This is research and development at 26%. So they are doing a lot of research and development. So I guess that's good to see, but they could always cut that down and increase their profits even more. Their effective tax rates, I don't know if there's much else to see here. Let's go to the analyst estimates. Here is the analyst estimates for Metastock. For the next year, they expect 19.92 earnings per share, and then the year after that, almost $23 a share, which that's like a 15% increase. And then we have their revenue estimate at 158.2 billion, and then jumping to 178 billion. And that is like a 14% increase in revenue. We plug that into my discounted model. Let me zoom this in here. All right. I put all the numbers in, the EPS estimate, the revenue estimate, the buybacks, the net debt, discount rate of 10%. That's the return that I want to get on all the stocks in my portfolio. And then an exit multiple of 22 because Meta is a high quality business and they have plenty of room to grow. They have a massive moat. It's going to be tough to compete with these guys. So with the analyst estimate for growth next year at 15%, and then steadily declining thereafter to maybe 6%, and then the exit multiple at 22, we can see that the fair share price is $542 a share. And with them trading at $483 a share, that is a bargain. We can do the same thing using revenue and profit margins, which I actually really like this way of valuing companies. Their growth of revenue at 14% into 2025. And then they've been able to grow revenues like quite substantially most years. So I think 10% is reasonable for the next 2 years after that, and then steadily declining thereafter, but never going below 5%. I do think that their revenue is going to outpace inflation, at least on average. Their profit margins, I think, will increase up to 40% and then maybe decrease a few years after. And even for the terminal rate, I have them at 30%. If I put that higher, it would influence this valuation a lot. So maybe their terminal profit margin is 40%. We can see that the fair value jumps up quite a bit, all the way up to $620 a share. So Meta, even though it's run up a lot in the past years, I still believe that it's trading at a fair value based on this analysis. If you want to try this analysis out for yourself, just check the description. I leave this spreadsheet for all you guys to try. It's completely free. And then yeah, leave a comment if there's something you think I missed. If you like videos like this, make sure to hit that like button. Subscribe because I'm doing a bunch of analysis videos and you don't want to miss out on any hot new stocks. Otherwise, I'll see you in the next one.